Hello, good day, guys. My name is Nick, technical analyst with SuperForex, and today we are looking at the analysis on the currency pair GBPUSD. And first, we will be talking about fundamental analysis before we move right down to technical analysis, which will be purely what we'll be seeing on the chart. Now we can say that GBPUSD has been having a very expected rise up, because the dollar has crept higher on the first trading day of the year, as much attention has turned to the economic data this week that may provide clues on the Federal Reserve's next moves. Now, yes, we also feel that somewhere Bitcoin surged ahead of $45,000 for the first time since April 2022. And the dollar index, which measures the US currency against 6 rivals, fell 2% in snapping 23, and this has been snapping 2 years of gains. It was last at 101.44, which was up 0.059% as investors weighed the prospect of the Fed cutting rates this year. Now, the dollar's ascent weighed on the Japanese yen the most, with the Asian currency down 0.35% at 141.36 per dollar, having slid 7% in 2023. Now, we have some rescue teams in Japan on Tuesday that struggled to reach isolated areas hit by possible powerful earthquake on New Year's Day, with reports of more than 20 people dead in a disaster, and this toppled buildings and knocked out power of thousands of homes. Now, the markets are now pricing in an 86% chance of interest rate cuts from the Fed to start from March, according to CME Fed Watch. We are expecting some anticipation. But the question is, when and how fast will the rate cuts be delivered? We have moderating price pressures and weaker growth impulses, which has seen the pendulum of market sentiment swing dramatically from the higher for longer mantra of most of last year to pricing in aggressive easing from central banks. Now, the focus now will be switching to a slew of economic data this week as we await a positive impact. We have a very important resistance zone, which should be looking to be broken. And it's about 27 pips, and a breakout will be a new zone at 80 pips, which is 1.28211 from that point, of course, which is good money. That's our technical analysis on today's currency pair GBPUSD. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock markets, we're having a look at Barclays. Now, we have been expecting Barclays to really deliver rate cut in May 2024, being expected by the Bank of England, of course. And Barclays has said on Friday it expects the Bank of England to start its interest rate cut of 25 basis points in May, and compared to its previous expectation of August 2024, we have Britain's economy might be in a recession, according to data that showed it's shrunk between July and September, shortly after Finance Minister Jeremy Hunt took the real step of suggesting that the Bank of England might cut interest rates to boost the growth of the economy. Now, this has been having some significant improvement on the market, but due to the festive period, we haven't seen much impact, but it's currently balancing on a very strong resistance, and this resistance is looking to break out following the new economic events coming up in place. Now, we have to put our trend lines in place, 154 and 152, previous support, previous resistances, and then we are expecting the breakout of these zones. If it goes upwards, we are looking out for nothing less than 20 pips, which is about 20 to 30 pips, which at 155.12, we have it also extending to 159.20 axis. And that's our technical analysis on today's stock markets. Barclays, I remain your host, Nick. Bye for now.